So we're going to look at ASOS, however you pronounce it. Again, traditionally a big favourite with SpreadX clients, but this year not been so great.
Yeah, it's interesting. It's still a favourite with SpreadX clients. I'm still buying the stock. However, in terms of broader investors, is sort of fallen out of favour this year. It's a bit out of fashion. I think it's down like 27.5% this year. It's trading below £50 for the first time since the end of 2016. The main issue was sort of its capital expenditure early in the year. I think it said it was going to be spending 230 to 250 million pounds over the next 2 years. Investors really weren't happy with the size of that spending. And then its third quarter figures in June. On the surface, things were pretty good. I think for the 4 months to the end of June, sales were up 21% to like £823.9 million. Sales in the UK were up 21%. Sales internationally up 18%. All very good.
Yeah.
However, it's said that its full year retail sales would be at the bottom end of the 25% to 30% growth guidance it had previously said. That really upset investors basically, and it hasn't really recovered since then. So obviously, in terms of its full year figures on Wednesday, the reaction is likely going to be dependent on how close to the 25% mark full year retail sales growth actually ends up being. I think beyond that, I think it's expecting its gross retail margin to improve by 100 basis points. Then I think it's expecting pre-tax profit to be up 26% to £101 million. So those two figures could come to dominate, but I do think the reaction, given that the guidance was a problem earlier in the year, I do think the reaction is going to be based on the size of the full year retail sales growth. In terms of what clients are doing, like I said, they are buying ASOS still, and especially since it's fallen so sharply in the last few months, the fact it's under £50 gives it a chance for a fairly decent rise if things do go its way on Wednesday.
Okay, thanks, Connor.